welcome to Friday's Targets in Focus. I'm Doireann Mc Dermott, and today we're going to have a look at commodity currencies. On this topic today I'm joined by Chloe Koos Dunand, and she is a commodity currency strategist at Pictet in Geneva. So Chloe, the latest GDP data for New Zealand shows in the last quarter it grew at the fastest pace in 3 years. Now, on the back of this news, the Kiwi dollar rose against all its major counterparts and bonds fell. Now, do you think this buoyant economic activity will be sustained, or should investors remain cautious for the economy and the Kiwi?
Well, New Zealand's economy will certainly continue expanding during the rest of the year, especially as the weaker sectors that were construction and consumption have strongly rebounded. According to the latest surveys, employment is also expected to pick up, and our own indicators point to an acceleration in external demand. So yes, New Zealand's activity should remain sustained, though the current drought will without doubt weigh somewhat on its agriculture sector and thus also related exports.
And at New Zealand's last rate decision, the central bank surprised markets by indicating it will maintain low rates this year. Now, Chloe, do you think this latest news will change their attitude, and what sort of actions are you expecting to see from the central bank?
New Zealand will without doubt see inflation pressures build up throughout the year, yet the central bank will be reluctant to increase interest rates since the New Zealand dollar has appreciated massively in the last few years. New Zealand's finance minister actually lately declared that the Kiwi was overvalued, and the central bank's governor that they were ready to intervene or even lower interest rates if the Kiwi was more than justified by economic fundamentals. So yes, we believe that the Kiwi will nevertheless profit from the acceleration in the global cycle, yet it will probably lose out in favor of the USD and less overvalued currencies in the longer term. Our targets against the USD are 0.84 in the medium term and 0.80 in 1 year's time.
Also, positive news surrounding Chinese manufacturing has also boosted demand for the Kiwi and Aussie dollars. Now, Chloe, will this have a strong and lasting impact on New Zealand and Australia's economy and on demand for these currencies?
Definitely, yes. China is an important trade partner for both countries, so their economies will be supported by China's activity. So as far as their currencies are concerned, they will most likely rise as China's economy and commodities demand accelerate. Reason to why we are positive old Australian dollar and New Zealand dollar on a 6-month horizon.
And the RBA had a rate decision this week. What type of impact did this have on the dollar, and what are your targets for this currency against its counterparts?
The RBA remains on hold, stating that the current monetary policy stance was appropriate. Since the market expected the RBA to cut interest rates or to soon have to do so, it came as a good surprise and made the Aussie rise. Our targets are 1.05 against the USD in 6 months' time, yet as for the Kiwi, we see a depreciation towards 1.01 in 12 months' time.
And now, Chloe, just to wrap things up, let's have a quick look at another commodity currency, the Canadian dollar. Now, what is your mid and long-term target for this currency?
So Canada's economic fundamentals are strong, and the country's expansion should accelerate in tandem with the U.S. We are positive on the short and medium term with the 6-month target at 0.97 against USD. On the 12-month horizon, we expect the CAD to remain strong against most currencies at the exception of the US dollar.
Thank you very much, Chloe. Well, viewers, that is it for today's Targets in Focus, but don't forget to keep up to date with the very latest Forex and economic news. But for now, have a great weekend.